Hello friends, good afternoon. Welcome to today's video session of TaxTower.blog, the ultimate library of tax solutions. Today our topic is handled by Mr. Muhammad Mustafa CT. He is the CEO and Chief Consultant of BRQ Associates Kasaragod Kerala, India, which is the professional firm providing audit, tax, and advisory services. He have more than 20 years of experience in direct and indirect taxation and company law. Let us start today's service topic. Thank you, and over to Muhammad Mustafa CT, sir.
Hello friends. Welcome to our today topic GST Audit Para Case Study, Non-Payment of GST on Other Income. GST Margin Scheme on Second-Hand Goods. The second-hand goods industry has been substantially growing since past few decades in India and across the globe. There is a huge organized as well as unorganized market for second-hand goods in India for resale of vehicles, electronic products, mobile phones, televisions, laptops, watches, jewelry, clothes, handbags, sneakers, and the list is endless. Hence, it becomes important to study how the indirect taxes GST affects the businesses engaged in trading of such second-hand goods. The margin scheme is applicable for a dealer dealing in second-hand motor vehicles only and not allowed to take input tax credit who adopt this scheme. Margin scheme for valuation of capital goods. The scheme is made applicable to all taxpayers on the sale of the motor vehicle held as a capital asset. VEED Notification Number 8 of 2018, Central Tax dated 25 January 2018. In this, GST has to be paid on the excess of selling price over the written down value as per the Income Tax Act, 1961, where depreciation has been claimed by the taxpayer. Where no depreciation has been claimed, GST shall be paid on the difference in the selling price and the purchase price. Margin scheme. Margin scheme under GST helps avoid double taxation on the supply of goods which has been taxed already. Under margin scheme, GST, the seller of the goods can calculate on the difference between the value of the supplied and the purchase value of the goods received. Normally, as per valuation rules, GST is charged on the actual transaction value of supply of the goods. However, in respect of the second-hand motor vehicles, a person dealing in such goods may be allowed to pay tax on the margin. If there is no margin, then no GST would be payable on such transaction. This is the basis of the GST margin scheme. Valuation of supply under the margin scheme. As per provisions of Rule 32 subsection 5 of the CGST Rules, 2017, where a taxable supply is provided by a person dealing in buying and selling of second-hand goods, used goods as such or after such minor processing which does not change the nature of the goods and where no input tax credit has been availed on the purchase of such goods. The value of supply shall be the difference between the selling price and the purchase price, and where the value of such supply is negative, it shall be ignored. Example for margin scheme. The company XYZ, which deals in buying and selling of second-hand cars, purchases a second-hand car at Rs 5 lakh from an unregistered person and sells the same after minor furbishing at Rs 5 lakh and 75,000, exemption of GST shall for the purchase value of the vehicle. However, when XYZ, a registered taxpayer, sold the same vehicle to a customer at the price value of Rs 5 lakh and 75,000, GST shall apply to the difference amount, Rs 75,000. Hence, GST applies only to the margin amount. In case if the seller adds other value to the total amount by way of repair, refurbishing, reconditioning or other services, the seller shall add the expenses to the value of goods and should apply as part of the margin. Frequently asked questions in relation to margin scheme under GST. What is margin scheme under GST law? As per the margin scheme under GST law, a second-hand goods dealer can sell used goods paying GST only on the margin value of such goods, instead of the transaction value or the sale value as per Rule 32 of subsection 5 of the CGST rules. What is the purpose of having a margin scheme in GST? The purpose of the scheme is to avoid double taxation as these are second-hand, used goods, having earlier borne the final tax incidence, and re-entering the economic supply chain. Is the term margin scheme defined under the GST law? No. There is no specific definition of margin scheme. However, the valuation of second-hand goods is specifically dealt with under Rule 32 of subsection 5 of the GST rules, which is commonly referred to as the margin scheme. Are second-hand goods defined under the GST law? No. Second-hand goods have not been defined under the GST law. As per Collins Dictionary, second-hand things are not new and have been owned by someone else. As per Oxford Dictionary, second-hand goods are those having had a previous owner and are not new. Who can take the benefit of margin scheme? As per Rule 32 of subsection 5, any person dealing in buying and selling of second-hand goods can avail the benefit of margin scheme. Is it mandatory to follow margin scheme for a supplier dealing in second-hand goods? No. It is not mandatory to follow margin scheme for a supplier dealing in second-hand goods. Can a normal supplier, not dealing in second-hand goods, sell its use-traded goods under the margin scheme? No. The benefit of margin scheme can be availed by the supplier only if there is a regular dealing in buying and selling of second-hand goods. Can a normal supplier, not dealing in second-hand goods, sell its old capital assets, fixed assets under the margin scheme? No. The benefit of margin scheme cannot be availed for sale of old capital assets, fixed assets. But only in the case of motor vehicles, only if input tax credit has not been claimed. What is the value of supply of second-hand goods as per Rule 32 of subsection 5? The value of supply shall be the difference between the selling price and the purchase price. Is the value of supply different in case of goods sold at a loss? Yes. Whenever the difference between the selling price and the purchase price is negative, the value of such supply shall be considered as nil. Can a supplier set off the loss on selling some second-hand goods against the profit on selling other second-hand goods while paying GST? No. As per Rule 32 of subsection 5, where the second-hand goods are being sold at a loss resulting in negative margin, the value of such supply shall be nil. Hence, the loss cannot be set off against the profits. What are the basic conditions to avail the benefit of margin scheme? First one, the supplier must to be dealing in buying and selling of second-hand goods. Second one, the goods being sold must be used earlier. Third one, the goods being sold must be pre-owned by someone else other than the supplier. Fourth one, there should be no major processing on such goods, which changes the nature of goods. Fifth one, the supplier must not have availed the input tax credit on the purchase of such second-hand goods. Does a supplier dealing in second-hand goods need to pay GST on purchase of goods from an unregistered person? No. Such purchases from unregistered persons are specifically exempted from GST as per Notification Number 10 of 2017 of Central Tax dated 28 June 2017. Does a supplier, dealing in second-hand goods, need to pay GST on purchase of goods from an unregistered person? Yes. There is no exemption for purchase of second-hand goods from a registered person, and hence the supplier has to pay GST as per the tax invoice received from the registered person. In above case, can the supplier avail input tax credit for the GST paid on purchase of second-hand goods from registered dealer? No. As per Rule 32 subsection 5, a supplier can follow margin scheme only if he has not availed input tax credit on the purchase of such second-hand goods. Relevant ruling in this matter is GST, AAR, Karnataka in Advance Ruling Number KAR, ADRG, 15 of 2020 in the case of Attica Gold Private Limited. Can unboxed goods be considered as second-hand goods? No. Mere unboxing of goods does not make the goods second-hand or used. Hence, selling of unboxed goods and selling without usage cannot be considered for availing margin scheme. Can refurbished goods be considered as second-hand goods? Yes. Selling of refurbished goods can be considered as second-hand goods and margin scheme can be applied to such goods. However, only minor refurbishment is allowed. In case of any major refurbishing where the nature of goods change, does not qualify for the margin scheme benefit. Can a supplier dealing in second-hand goods availing the benefit of margin scheme, sell its old capital assets, fixed assets under the margin scheme? No. The benefit of margin scheme cannot be availed for sale of old capital assets, fixed assets other than second-hand motor vehicles in which input tax credit not claimed even by a second-hand goods dealer. Is a supplier following margin scheme required to issue a tax invoice for supply of second-hand goods? No. If margin scheme is opted for selling second-hand goods, the person supplying the goods shall not issue any taxable invoice and the person purchasing such goods cannot claim any ITC on these goods. How are the value additions to the second-hand goods to be treated under margin scheme? In case any value is added to the second-hand goods by way of repair, refurbishing, reconditioning, over and above the sale value, the same shall be added to the value of goods and be part of taxable margin. Can margin scheme be availed in case of interstate supply of second-hand goods? Yes. The margin valuation scheme can be availed for both intrastate as well as interstate supplies. GSTAAR Rajasthan in Advance Ruling Number RAJ AAR 2018-19 in the case of Shambhu Traders Private Limited. Can a supplier availing margin scheme take input tax credit on expenses other than purchases of second-hand goods? Yes. Rule 32 of subsection 5 restricts input tax credit availment only on the purchase of second-hand goods, which are further sold under margin scheme. Hence, input tax credit can be availed on all business expenses like rent, advertisement, commission, professional expenses, other than purchases of second-hand goods subject to the basic conditions of input tax credit availment specified in Section 16 to 21 and Rules 36 to 45. GSTAAR Karnataka in Advance Ruling Number KAR ADRG 40 of 2020 in the case of Attica Gold Private Limited. Where should the supplies of second-hand goods appear in the monthly return GST or 3B? The total supplies of second-hand goods should be mentioned against outward taxable supplies in Table 3.1, wherein the total taxable value shall be the taxable margin value of second-hand goods. How to show the supplies of second-hand goods in the monthly return GSTR1. The total supplies of second-hand goods should be mentioned against outward taxable supplies in Table 4, 5 and 7, as applicable, wherein the taxable value shall be the taxable margin value of second-hand goods on which taxes are being paid. Is it mandatory to generate e-way bill, where second-hand goods are being supplied and the gross value exceed the minimum threshold limit for e-way bill? Yes. E-way bill rules shall apply to all the supplies of second-hand goods in the same manner as they apply to normal goods. Even if the taxable value of such goods are below the threshold limit of Rs 50,000 but the gross value exceeds the same, it is mandatory to generate an e-way bill for such transfers. Is it mandatory to follow e-invoicing rules for second-hand goods? Yes. It is mandatory to follow e-invoice rules even for second-hand goods, where the aggregate annual turnover gross exceeds the specified turnover limit for e-invoice at present. The threshold is INR 5 crores. Thank you for listening. By BRQ Associates, Kasaragod, Kerala, India. In case if anybody you have any query or require more information, please feel free to read my blog in www.taxtower.blog. Or contact or WhatsApp me anytime in the number 9633181898. Or the email ID brqgst@gmail.com.